Welcome back to Silver and Metal IQ, your go-to source for everything gold, silver, and precious metals. I'm Peter, and today we're diving into a story that could affect the value of your wealth, your retirement, and the very stability of our financial system. If you think silver is just a shiny metal, think again, because right now it's sitting at record highs, and the forces driving it go far beyond your average market trends. Stick with me, because by the end of this video, you'll understand why this silver rush could potentially create a national emergency. We're not just talking about price charts or numbers. We're talking about trillions of dollars in global debt, governments struggling to fund themselves, inflation eating away at your savings, and the explosive demand for silver, physical silver, that's about to overwhelm the market. Over the last year, silver is up 200%. Over 3 months, it soared 82%, and in just the first month of this year, up 36%. Meanwhile, the spot price of silver today is $94.79 per ounce. And the physical premiums on top of that mean only those who hold actual silver in hand are truly protected. But this isn't just about wealth, it's about security. Governments around the world, including the United States, are recognizing silver as a critical material for industry and national defense. From AI data centers to battery production for electric vehicles, industrial demand is surging while supply is constrained. COMEX inventories are dwindling fast, and if you think paper contracts alone control the market, think again. Real silver, the kind you can hold, is in a race against global demand, and history shows that when scarcity meets fear, prices explode. Today, we'll break down everything: the difference between physical and paper silver, the recent government actions that could impact supply, how trading futures can be profitable, and why a crisis of confidence in the financial system is fueling this rally. By the end, you'll see why silver isn't just a metal, it's a hedge, a lifeline, and potentially the most important asset you could own right now. So grab your notepad, buckle in, and let's explore why this silver boom is unlike anything we've ever seen, and what it means for your money, your future, and the world economy. The global debt crisis isn't just a US problem, it's a worldwide phenomenon. Countries like England, France, China, and the US are all running deficits that are historically unprecedented. Governments cannot increase spending without further inflating debt, and the numbers are staggering. US projected deficits at 7% of GDP, total debt reaching 100% of GDP, figures rarely seen outside wartime. This flood of spending has fueled corporate profits and short-term growth, but it's also created a ticking time bomb for currencies and purchasing power. Inflation eats away at savings, and ordinary households are left struggling to maintain financial stability. Amid this chaos, silver is quietly stealing the spotlight. Over the last 5 days, the price of silver has surged 10.3%. Over a month, it's up 36%. And over 3 months, it has skyrocketed 82%. Year to date, it's already up 32%, and over the last year, a staggering 200%. Traditional investments like 401ks or pensions simply cannot compete with these returns. What makes this rally even more striking is that it's not just paper gains. Physical silver, the metal you can hold, is in unprecedented demand, creating supply shortages that have forced dealers like SD Bullion and ATMX to set high minimum purchase and buyback thresholds. The physical scarcity is compounded by global population versus available silver. With roughly 8 billion people on Earth and only 4 billion ounces of above-ground silver, that works out to just 0.5 ounces per person. If you hold more than that, congratulations, you're already ahead of the global average. Governments are recognizing this scarcity and treating silver as a critical resource. Recent actions by the U.S. administration, including investigations and import adjustments of processed critical minerals, show that silver is no longer just a commodity. It's a strategic asset linked to national security, industrial demand, and technology development. Meanwhile, the futures and options markets reveal another layer of opportunity. Trading paper silver through futures contracts or options requires skill and education, but it allows savvy investors to profit from price swings without holding physical metal. Experienced traders understand that the market punishes emotion and rewards discipline. By studying patterns on charts, using mathematical strategies, and learning from reputable educators like Lance Brightstein or Al Brooks' price action systems, traders can navigate the volatility and capitalize on both upswings and downswings in the market. Yet, despite these technical opportunities, the driving force behind silver's recent surge is deeper than numbers. It's a crisis of confidence, trust in fiat currency, trust in the Federal Reserve, and trust in governments to manage their economies responsibly. Every headline about debt, deficit, or inflation erodes confidence, pushing investors toward tangible assets like silver. Industrial demand, national security concerns, years of price suppression, and now the new price discovery combine to create a perfect storm. In short, silver is no longer a secondary investment. It's becoming a cornerstone of wealth preservation in a world teetering on financial uncertainty. While silver's soaring price grabs headlines, it's crucial to understand the difference between physical silver and paper silver. Physical silver, coins, bars, and bullion, is the metal you can hold in your hands. It's immune to banking failures, inflation, and the risks of derivatives. Buying and holding physical silver protects your purchasing power because you control the asset directly. In contrast, paper silver, futures contracts, options, and ETFs is essentially a claim on silver, often unbacked by actual metal. The value of paper silver fluctuates with market sentiment, supply and demand expectations, and speculative activity. If the system falters or physical delivery is demanded, paper holders may find there's no metal to claim. This distinction is more than academic. COMEX inventories, one of the primary physical silver repositories, are dropping fast. Registered silver has fallen to roughly 120 million ounces, just a fraction of global demand. At current rates, if delivery demands continue, these reserves could reach zero in less than 3 months. That's not a projection, it's a tangible calculation. Meanwhile, high-demand platforms like SD Bullion are issuing minimum order requirements, reflecting unprecedented consumer demand. The physical market is straining under the weight of investors, industrial buyers, and governments, all competing for the same metal. Government recognition of silver as a critical material adds another layer of urgency. Recent U.S. proclamations and investigations into processed critical minerals, including silver derivatives, show that this metal is essential not only for industry, but also for national security. From AI data centers to electric vehicle batteries, critical infrastructure relies on silver. The administration has even discussed measures like price floors and import adjustments to secure supplies. While these announcements don't always name silver directly, the context makes it clear that the metal's strategic importance is real and escalating. At the same time, paper markets continue to function as a parallel system. Futures trading, options, and derivative contracts allow investors to speculate on price movements without touching metal. However, these paper markets come with risks. Short positions, derivatives, and leveraged contracts can create systemic vulnerabilities if physical delivery is demanded. Banks and traders who bet on price suppression may face billions in shortfalls, further fueling market instability. Understanding both systems, physical and paper, is critical for anyone serious about silver investing. Education is key. Trading futures and options requires discipline, mathematics, and pattern recognition. Emotional decisions in volatile markets lead to losses, while strategic approaches, like reading charts, understanding cyclical patterns, and leveraging educational resources, can turn volatility into opportunity. But even with these strategies, nothing substitutes for physical ownership in a world where confidence in fiat currency is eroding. As debt balloons, deficits widen, and governments struggle to maintain credibility, silver stands as a tangible hedge and a strategic asset. Moving forward, The current supply-demand dynamics combined with national security concerns set the stage for a perfect storm. Industrial demand, dwindling inventories, and surging retail interest mean that silver's value is no longer purely speculative. It's strategically essential. Anyone ignoring the implications of these trends risks missing one of the most significant financial shifts of our time. The message is clear. Understanding the silver market now isn't optional. It's essential for anyone looking to preserve wealth, protect purchasing power, and navigate an increasingly unstable financial world. As we dive deeper into the silver market, it's important to understand not just the fundamentals, but also the technical mechanics driving price action. Over the past several months, silver has been in a parabolic uptrend, showing sharp increases with very little pullback. Price charts reveal clear patterns, sideways consolidation followed by explosive upward moves. These patterns aren't random, they're fractal, meaning they repeat across different time frames, whether you're looking at a 5-minute chart, an hourly chart, or a daily chart. Traders who understand this can anticipate market behavior, identify opportunities, and avoid emotional decision-making that often leads to losses. Trading silver, whether through futures, options, or paper derivatives, requires patience and education. Last night, I personally studied these patterns with a mentor, observing the market move in real time. Using mathematical strategies rather than gut feelings, we were able to spot profitable trades on both upswings and downswings. The key takeaway? The market punishes emotion but rewards discipline. A structured approach to trading ensures that even volatile markets become opportunities rather than traps. Futures contracts, particularly short-term options, allow sophisticated traders to benefit from price movements without holding physical metal. But these require understanding cycles, risk management, and proper execution. On the macro side, governments and financial institutions are influencing the market in ways that ripple down to everyday investors. Debt levels, inflation, and deficits are eroding confidence in fiat currency, creating a crisis of trust that pushes people toward tangible assets like silver. Meanwhile, national security concerns amplify this demand. The U.S. has classified silver as a critical mineral, essential for defense, technology, and infrastructure. These factors, combined with dwindling physical inventories, mean that every ounce purchased has strategic significance, not just financial value. The micro picture also reveals systemic issues. For example, local government spending mismanagement, such as in Conroe, Texas, mirrors the larger national pattern. Cities and councils are effectively printing money via taxes and subsidies to cover failing projects like hotels with unrealistic revenue expectations. This local-level fraud, combined with macroeconomic instability, highlights how widespread the consequences of monetary mismanagement can be. Citizens who fail to understand these dynamics may find their wealth eroded, not just by inflation, but by poorly executed government spending initiatives that have ripple effects across the economy. Technically, silver's chart shows a combination of naked short squeezes, supply constraints, and investor panic, but the driving force behind the rally is ultimately confidence, or lack thereof. When trust in the banking system and the Federal Reserve wanes, investors seek assets that are real, tangible, and independent of government manipulation. Silver, particularly physical silver, becomes both a hedge against systemic risk and a potential profit generator for those who understand trading mechanics. In essence, the market is signaling that the next phase isn't just about paper contracts, it's about real-world scarcity meeting unprecedented demand. Moving forward emphasizes the intersection of technical analysis, market psychology, and macroeconomic pressures. Understanding the patterns in trading, the implications of dwindling physical supply, and the systemic risks tied to debt and currency instability gives investors a roadmap to navigate this complex environment. Silver isn't just rising in price, it's telling a story about the fragility of the global financial system and the opportunities that arise when fundamentals, technicals, and human behavior converge. silver's meteoric rise isn't happening in a vacuum. It's being driven by a perfect storm of macroeconomic, geopolitical, and strategic factors. On the government front, the United States has been taking decisive steps to secure critical minerals, including silver, recognizing their vital role in national security and industrial applications. Recent proclamations under Section 232 of the Trade Expansion Act outline measures to adjust imports of processed critical minerals and derivative products. These actions are not just regulatory. They reflect a fundamental understanding that silver is essential for defense systems, AI data centers, and advanced technology infrastructure. While the official language avoids naming silver directly, the context leaves little doubt. Physical silver is a priority. Industrial demand is another key driver. Large companies, including those in the tech and EV sectors, rely on silver for batteries, electronics, and solar technologies. Combined with limited above-ground supply, this creates a scenario where demand far outstrips available physical metal. COMEX inventories are dwindling, with registered silver at just 120 million ounces, enough to meet global delivery requirements for only a few months. Dealers like SD, Bullion, and ATMEX have responded by instituting high minimum orders for buying and selling silver, reflecting the real pressure on the physical market. These dynamics underscore a stark reality. Paper silver contracts may exist in abundance, but physical silver is finite, and scarcity is driving prices higher. Even geopolitical factors, such as Greenland's strategic potential, influence the market. Discussions around controlling resources in Greenland highlight the intersection of natural resource strategy and national security. The U.S. has signaled its intent to secure critical minerals globally, counterbalancing influence from non-market economies. While some details are speculative, the trend is clear. Governments are preparing for long-term supply constraints, and silver is at the center of that preparation. These moves add another layer of confidence that silver's value is not merely speculative, it's strategic, with implications for national defense and global supply chains. The broader economic picture amplifies this trend. Global debt levels are unsustainable, inflation is eroding purchasing power, and traditional financial systems are under pressure. A potential currency revaluation could redefine gold and silver prices in ways few investors anticipate. Analysts estimate that if a global revaluation occurred, gold could approach $40,000, $46,000 per ounce, with silver potentially hitting $2,600 per ounce at a traditional 15.1 ratio. Even without such an extreme scenario, the current trajectory demonstrates that silver's supply constraints, industrial demand, and macroeconomic instability are aligning to create unprecedented upward pressure. Finally, silver's perfect storm is compounded by investor psychology and crisis of confidence. Years of price suppression are finally giving way to market transparency and price discovery. Banks and trading institutions that relied on paper positions now face shortages in physical metal, creating systemic pressure. Meanwhile, everyday investors, aware of the global debt crisis and rising inflation, are flocking to tangible assets, further tightening supply. This convergence of scarcity, strategic importance, and macroeconomic instability explains why silver is breaking records and why analysts warn that its trajectory could continue with explosive momentum. In short, silver is no longer just a commodity, it is a strategic asset, an industrial necessity, and a hedge against financial uncertainty. Anyone ignoring these forces risks being caught off guard as prices climb and the supply-demand imbalance intensifies. Understanding this perfect storm is critical for investors, traders, and anyone seeking to protect their wealth in an increasingly unstable global economy. As we bring this series to a close, it's essential to connect the dots between the silver market, government policies, and broader societal impacts. The global financial system is facing mounting stress from unsustainable debt, inflationary pressures, and systemic moral hazards. Central banks, led by the Federal Reserve, have relied on unbacked money printing for over a century, artificially supporting failing banks and markets while eroding the purchasing power of everyday citizens. Ending the Fed, or at least reforming the system, would be a seismic shift. Interest rates would be determined by real market forces, unsustainable banks would face failure, and economic transparency would increase. This would create short-term disruption but long-term stability, while tangible assets like silver would see their value recognized and preserved. The societal implications of this shift are profound. Ordinary citizens, who are already feeling the pinch from inflation and taxation, would be forced to confront the realities of mismanaged debt. Yet silver and other tangible assets become crucial tools for wealth preservation. Physical silver, in particular, allows individuals to protect purchasing power and hedge against currency devaluation. At the same time, trading in futures and options remains an avenue for educated investors to profit, but it requires discipline, education, and a clear understanding of market dynamics. The difference between paper and physical silver cannot be overstated. Paper markets can be manipulated, but physical metal is finite, secure, and strategically vital. Looking at the broader macro picture, the world is experiencing a perfect storm. Industrial demand, national security concerns, and a 5-year structural supply deficit are converging with surging retail interest. Governments are recognizing silver as a critical mineral, triggering policy actions and import adjustments. At the same time, years of price suppression are being undone, allowing new price discovery to take place. This combination of scarcity, strategic importance, and systemic distrust is creating a market environment unlike anything we've seen in decades, if not centuries. Investors who understand these dynamics have a unique opportunity to safeguard their wealth and even benefit from volatility, while those who ignore the trends risk losing ground in a rapidly changing financial landscape. At the local level, we also see the consequences of fiscal mismanagement mirrored in communities like Conroe, Texas. Misguided investments, failed projects, and misuse of taxpayer funds illustrate how poorly executed policies can devastate local economies, just as systemic debt and unaccountable banking practices threaten national and global financial stability. Both cases highlight the importance of vigilance, education, and participation. Citizens who engage, educate themselves, and advocate for fiscal accountability are the ones who will navigate these turbulent times successfully. Finally, a financial disclaimer. All the content shared in this series is for educational and informational purposes only. Silver and other precious metals are volatile investments, and trading in futures or options carries significant risk. This is not financial advice. Individuals should perform their own research, consult qualified professionals, and carefully consider risk tolerance before making any investment decisions. Silver's role as a hedge or an investment is influenced by many factors: supply, demand, macroeconomics, and geopolitical events. And past performance does not guarantee future results. Always invest responsibly and with informed caution. Thank you for following this series on Silver&Metal IQ. Understanding silver isn't just about profits, it's about awareness, strategy, and protecting your financial future in a world facing unprecedented economic challenges. Stay informed, stay vigilant, and take action where it counts.